Can you see opportunity, the matter of opportunity cost? Opportunity cost is the economic benefit, okay, that are forgone as a result of pursuing some other course of action. So, if I decide to use my office space for meeting room as opposed to renting it out to a business, a practitioner, the rental I'll be losing if I don't rent it to the practitioner is an opportunity cost for using it as a function room. So the benefit you forgo by doing something different, another course of action. That benefit is what we call the opportunity cost forgone. All right, it's not actually recorded in any book. These opportunity costs are not actual monetary outlays and are not recorded in the accounts of an organization. Example 3 or 4 here. This will deal with opportunity cost. Special offer. JPS receives a one-time, one-off order that is not considered part of its normal ongoing business. JPS makes a single product with a unit variable cost of £8. So the variable cost is £8, and the normal selling price for that product is £20. When you are doing things, always remember your marginal costing. It's a tool that's a very important decision-making tool. So straight away my head is telling me that there's a contribution of £12 here. 20 minus 8, contribution £12. I can note it down somewhere. It might be handy. A foreign distributor offered to purchase 3,000 units at £10 per unit. The annual capacity is 10,000 units. So they have capacity to produce more than what they are doing. So they can take up any order within that range. And an annual fixed cost total 48,000. But JPS is currently producing and selling only 5,000. So they are working below their capacity. They have the chance to take up at least another 5,000. Okay. So, contribution statement of profit and loss. This is their original position. They are operating at 5,000 level, unit produced and sold. So that gave them an income of 100,000 revenue, less the variable cost of 40,000 to give them a contribution margin of 60. If you go back to my first point, I said my contribution is 12, 20 minus 8, 12. If I multiply that by 5,000, that would have given us straight to this point of 6,000 contribution margin. So now we deduct the fixed cost, which we have now broken it down into 2, 40, 28 and 20, which is 48, and the final profit of 12,000. This is the profit of 12,000. Now, if I want to use the contribution approach to deal with whether they should accept that special offer, to see whether it's worth the while, because they have the capacity. So they offer to sell them, they offer to buy it at £10. But remember, our variable cost to produce that particular item, product, is £8. So that particular offer will give us a contribution of only £2. So if we accept the offer, 3,000 times 2, so it's an additional 6,000. Looking at it this way, it's still worth it. All right. But let's look at the statement together. 6,000 is an extra contribution we're making. Looking at the statement together, but that's it. This another approach, one approach. The increased revenue is, that's the contribution approach anyway. The increased revenue is 10 pounds times 3,000 with 30, and the increased cost, that to make it variable cost, is 8 times 3,000, which is 24. That gave me again same answer, 6,000 contribution. That's 2 times 3. All right. That's the way to look at it, the offer, to see whether it's worthwhile. If Jet accept the offer, profit will be increased by 6,000. But that's the contribution approach I just told you. We can reach this same result more quickly, which I said, like this. Special order contribution is 10 minus 8, which is 2. Change in profit is 2 times 3,000, give us an increase of 6,000. Okay? There are other ways, but you don't need to worry. This is the joint statement. The joint statement. Currently, 20 times 12 will give us 60. Offer 3 times 2 contribution will give us 6. So that's the same thing. 12 before now is 18, an increase of 6,000. We don't need to worry about this. The principle is very important. Once you get the principle right, you can actually use different approach to get the same answer. Utilization of constrained resources. Utilization of constrained resources. What do we mean by constrained resources? It's simply scarcity. When our resources are scarce, we have to find the most profitable way of utilizing these resources. Firms often face the problem of deciding how to best utilize a constrained resources. Usually, fixed costs are not affected by this particular decision, so management can focus on maximizing total contribution margin. So again, we don't look at unavoidable costs, we look at the avoidable elements. Let's see example to clarify how to handle constrained resources. Can you all see the slide here about, which is example 404? Yes, if you can see the slide, this is very important. I think I will rewind and start all over again. Can you all see the slide, utilization of constrained resources? Thank you. All right, as I said again, constrained resources are scarce resources. When our resources are scarce, we say we are constrained by those particular resources. So then what we need to do is to find the best way to utilize these scarce resources. As I said, firms often face the problem of deciding how to best utilize a constrained resources. they will not consider unavoidable costs like fixed costs in making this decision. So management can focus on maximizing their contribution margin. Let's see this example. Can you see example 404 on the screen? It is very important that you see this example and we follow it together. Can you see the example on the screen? Example 404. Okay, well done. So, Ensign Company produces 2 products and selected data is below. Product 1 and 2. If you look at it, you see that the selling price for product 1 is £60 and that of product 2 is £50. The variable cost for 1 is 36 and that of 2 is 35, giving us a contribution margin of £24 for 1 and £15 for 2. Current demand per week for each of these products for 1 is 2,000 and for 2 is 2,200. The contribution margin ratio is 40% for 1 and 30% for 2. Okay. So, going further, you can see that processing time required on machine A1 per unit is 1 minute, and machine and for product 2 is 0.5 minutes. Note those points down. Don't worry about the contribution margin ratio, which is the contribution over sales. Contribution margin ratio is contribution that 24 over 60 times 100. That will give us 40% for 1 and then 30% for 2. Let's read on and see. Machine A1 is the constrained resources. Machine A1. There is excess capacity on all other machines. So machine A1 is the one critical in this decision. The rest are available. They are in excess capacity. Machine A1 is being used at 100% of its capacity and has a capacity of 2,400 minutes per week. How do we now best use this machine A1? It is at its limit and the available time is 2,400 minutes. What we need to do is to look at the time spent on this product by this machine and then try to find the contribution per minute of this machine, because it's a critical one. So let's go back to the analysis here. This one I will ask you to do it for me. Machine A1 spend 1 minute to produce product 1. So what is the contribution per minute of machine A1? Type in your answer in the chat for me. What is the contribution per 1 minute of machine A1? Okay. We know the total contribution for product 1 is 24. Product 2 is 15. So for product 1, what is the contribution per minute of machine A1? Type in your answer in the chat for me. I'll give you 1 minute. Any answer? You got to be bold. Your exam is next week. You got to be bold. You get it wrong now is better than next week. I will go over it with you. Any answer? I tell you what you need to do. What you need to do is to divide the contribution 24 by 1 minute, and that will give you £24 per minute of machine A1 for product 1. And for product 2, you divide £15 by 0.5 to get the contribution per minute, and that will give you £30 per minute of machine A1 to produce when you produce product 2. Okay, so what we do now is we rank the contribution per minute. It's given here 24 divided by 1, it gives you £24 per minute, and 15 divided by 0.5 gives you £30 per minute. When you rank it, 2 will become 1, will be 1, and then 1 will be 2. So that's the ranking means we do the one with the first in the first order, in ascending order. 1 will be done followed by 2. 1 will be done followed by 2. So machine product 2 gives us the best contribution per machine time. 2 gives us the best contribution per machine time. So we need to allocate all our time in achieving the demand for product 2 before we now use the balance, if any, of our time left to satisfy product 1. Okay, that is how we have to look at this question. So, having said that, how many units of product 2 is in demand for the week? How many units of product 2 is in demand for the week? Because that's the one we want to deal with first. We go back to our previous slide, and we can see that the current demand per week for product 2 is 2,200. Since it's 2,200, how many minutes do we need to satisfy that demand? How many minutes? Oh, hello Montre, any question? No. Okay, thank you. I saw your hands up. Just noticed that now. Okay, that's all right. So I said product 2 gives us the best contribution per hour machine time. So we need to satisfy the whole demand for product 2 for the week. The demand for product 2 is 2,200. How many minutes do we need to satisfy this demand? So what you need to do is to multiply the quantity 2,200 by the time per product. It is 50 minutes we need, 0.5 minutes we need to produce 1. So we multiply that by 0.5. That gives us excuse me, that gives us 1,100 minutes to satisfy the whole demand of product 2. Okay, that's the logical step to take. So if we allocate 1,100 to product 2, how many minutes do we have left of the total machine A1's available time? Can you type it that into the chat for me? machine A1 has a maximum capacity stated in the slide of 2,400 minutes. If we spend 1,100 minutes of it to satisfy the production of product 2, how many minutes have we got left to use in producing product 1? Type in your answer in the chat for me. I'm waiting for your answer. I will, at this point, give you 2 minutes to consider the same question. I'll give you 2 minutes to consider this question, and I will come in and solve it with you. Okay. Well, what we are trying to do here is to allocate our time profitably. We have decided that we will do product 2 because it gave us the best contribution per minute. For that reason, we allocated 1,100 of our time minutes to satisfying the whole demand for product 2. The balance now will be the maximum time available for machine A1, which is 2,400 less 1,100. That means we have only 1,300 left to do product 1. But remember, product 1 demand is 2,000. So if we are to do it completely, to be needing 2,000 minutes, because it's 1 minute per product. But now it's because of the constraint, we only have 1,300 left to produce, to allocate to product 1. So that's the only time we have now. So we cannot satisfy all the demand for product 1. So we'll be doing 1,300 divided by 1, which is 1,300 product will be achieved for product 1. So that is it, our product. Our product will now be product 1, 1,300, and product 2, the full entire 2,200. And this is the outcome of the product. So product 1, we can only produce 1,300 because it is 1 minute per product, so we only got 1,300. And product 2, okay, we got the full 2,200. So if we multiply our units produced by the contribution margin, which is 24 for product 1 times 1,300, give us a total of 31,200, and 15 contribution per unit for product 2. Multiply that by the entire 2,200, that gives us the 33,000 total contribution. So the total contribution will be 64,200. Okay, that is how we allocate our scarce resources. Total contribution margin will maximize by promoting those products or accepting those orders that provide the highest unit contribution margin in relation to the constrained resources. This is what we have all we have explained earlier. This is the bottom line. Managing constraints. The manager should take an active role in managing the constraint itself by increasing the efficiency of the bottleneck and by increasing its capacity. ways to increase the capacity of a bottleneck. It's working overtime, if it's possible, subcontracting, investing in additional machine to see if we can get more time. 2 is better than 1. Shifting workers, those are the ways you can manage your constraint. Focusing business process improvement, reducing defective units. Okay. Now, I want you guys, I will upload a question which I would like you guys to have attempt. First, I will put it in PDF form because in Word format doesn't come up easily. So how are you guys preparing for your exam? I hope you are practicing the MCQ questions. So are you happy with today's lesson? Is there any area you want me to go back and clarify? We have some time. Question time. I want you guys to ask questions. If there's any area of the topic we went through today, relevant costing, talk to me. We have some time. We can go back and look at them again. Okay. Thank you. Right. Have you done? What I mean is you practice your MCQ question. There's a question I will ask you to do here for me. I'm going to upload it. And I just have a few questions I want you to calculate for me. Let's Can you do this question for me? Look, let's look at question 10. Question 10 is relevant costing question. Let's look at that. I'll give you guys 3 minutes to answer this question. Hans product manufactures 30,000 units of part S6 each year for use in each production line. At this level of activity, the cost per unit for part S6 is as follows. They're giving us the cost here: direct material, direct labor, variable overhead, and fixed overhead of £9, giving us a total cost of £25 full cost. An outside supplier has offered to sell 30,000 units of part S6 each year to hand products for £21. If hand product accept this offer, okay, the facility now being used to manufacture part S6 could be rented to another company at an annual rental income of £80,000. However, Hand Product has determined that 2/3 of the fixed overhead being applied to part S6 would continue even if part S6 were purchased from the outside supplier. Require prepared computation to show the net advantage or disadvantage of accepting the outside supplier's offer. So here again we have to consider relevant costs in this computation. All right, try and do it. Okay, and I'll give you 3 minutes to do that. For this question, remember our relevant cost again. Our cost card will be adjusted so that we take account of the avoidable elements only. They told us that 2/3 of the fixed overhead applied will continue, so they are not avoidable. So that £9 per unit of fixed overhead will need to be adjusted so that we have only the avoidable element. That will mean dividing that 9 by 3, okay, give us £3 each. So £3 is avoidable and £6 is not avoidable. So if we deduct £6 there, that is 25 minus 6, it will give us £19 costs avoidable or relevant costs. So that £19 relevant cost is our relevant cost. Okay. So to manufacture this, it will cost us £19 per unit. So 19 times 20, 30, that will give us £570 per unit to manufacture it, to manufacture the 30,000. All right, plus the economic value you're going to be foregoing is a cost. That will be another cost to us, which is 80,000. So we add that to our 3,570. That will give us 650. But we've gotten an offer of £21 from an outside supplier. Okay, which will amount to 21 times 30,000, 30,000. All right, so that's how I have to consider this question. All right, so it will cost us £630,000 from an outside supplier, which is £21 times 30,000, which is 360. But for us, it will cost us 19 times 30,000. 19 times 30,000, which is 570. But on top of it, we have to add a foregone opportunity cost, economic value we would have earned by not doing it. Okay, so for doing it, we have to forego that 80,000. We add that 80,000 to our 570,000, which is 19 times 30. That will now give us a total of 650,000. If we compare this 650,000 pounds to make it to the cost to buy it, which is 630,000 at the rate of 21 pound times 30. That means that it is cheaper to buy it than to make it. This is how you have to approach this question. Look at it, have a go at it again. Remember the principle we are applying here, the principle of considering the relevant costs only and comparing it with the other alternatives. Only the relevant cost. To make it, the relevant cost is the 19 pound, that is 25 minus 6, which is unavoidable cost in the fixed cost, leaving us with 19 pounds. 19 pounds times the total quantity we need to produce 30 will give us 570,000 pounds. Okay. Now, 570,000 pounds, we now add our fixed lost opportunity cost of 80,000, which now give us the total of 650,000 pounds. 650,000 pounds to make it. Now check to buy it. They've given us the price to buy it is 21 pounds to buy it from outside supplier. 21 times the 30,000 will give us 630 pounds. The difference is 20. It's better off to buy it at 630,000 than to make it at 650,000. So, thank you for today's online section. Okay. I wish you good practice in readiness for your exam next week. Just do a lot of practice. Go to the MCQ question. Look at the questions I've posed to you and remain active. Practice and you'll be okay. Alright? Thanks for joining my online class today. Until then, keep safe. Any question before I close? Anybody, any question? Oh, thank you. Thank you, everybody. So, see you next time and remain safe.